In this video, we're going to be looking at ascending and descending triangles. So some of the objectives that will be discussed include recognizing these triangles, the ascending and descending triangles. We'll also look at identifying the completion of those triangles, and we shall try to derive price targets based on triangles, including our minimum projections, our equality projections. We'll be using 1-to-1s and 2-to-1s also. So, ascending triangles are intrinsically bullish patterns, and they can occur in uptrends or downtrends, and price is always expected to break out to the upside and continue rising. Now, they occur when price oscillates between a rising support trend line and a horizontal or static resistance level. And the pattern is also confirmed as soon as the trend lines are established. And to note for volume will usually subside as the triangle develops, and then it will expand to the breakout. So let's get a visual up here. You can see that we have a trending phase in the triangle. You have a horizontal line here, a rising trend line, and you have the breakout. So during this kind of triangle phase where the price is consolidating, you look to see volume contract. Volume is much less than what it was before. But then when you have the breakout, that's when you see volume expand with the explosion in price. So here's an example of an ascending triangle in Intel shares. We've got Intel and we have a weekly chart. So each candle, once again, represents a week. So here, to calculate price targets, we take the range of the base. As you can see here, this is the difference in height, or the price difference between this point here and this point here. We get that range of the base, which is the vertical distance, remember, between here and here. And then you project that upwards at the point of breakout, you can see, to give you your minimum 1-to-1 and your 1-to-2, which is double this distance here. You're simply doubling the base difference to get your 1-to-2 target point. And you can also see that both targets were met. The 1-to-1 target point was met, and the 1-to-2 target point was also met. And we also saw volume declining throughout the development of the triangle. This is the development of the triangle through the blue dotted lines. And you can see that volume contracted throughout that period. And then when the break occurred, volume started spiking and broke out of a mini kind of downtrend. And it's interesting to see that it confirmed the pattern. Remember, you get volume subsiding, pattern consolidates, and then you have breakout in volume, price breaks out as well. With that confirms an ascending triangle has taken place. So the bearish equivalent of an ascending triangle is a descending triangle, and that's where price oscillates between a declining resistance trend line and a horizontal or static support level. And the pattern is confirmed as soon as trend lines are established. Remember, you have that main bit of price action, you have the trending phase where you have the triangle, and then you have the break to the downside, which confirms it being a descending triangle. So let's look at an example with an ascending triangle that can be found in the euro against the dollar. Each candle here is a daily representative candle, so each one represents a single day. And we can see that the price breaks out below the support point. This is the support point, and meets the minimum 1-to-1 projection target based on the base of the triangle, which is this area we've got. That's the base of the triangle, so the difference between the prices there is then projected from the point of the breakout once again, as we said before. And then you get your 1-to-1 projection target where you would look to find support. And again, in this case, volume confirmed the pattern with gradually contracting volume throughout the triangle, and an expansion in volume also occurs. We have here the volume was contracting whilst the consolidation was taking place and the descending triangle pattern was forming. And then once it's confirmed, you've got the volume confirming it as well. The price action is confirmed by the volume action as well. So to conclude, it's important to know the difference between ascending and descending triangles because they give very different signals. Both types of triangles can either be a continuation or a reversal pattern, depending on the context. So for instance, an ascending triangle would be regarded as a continuation pattern if it forms partway through an uptrend, but it would be considered a reversal pattern if it occurred after a downtrend.